Dipan Mehta on the show. Dipan, cars, bikes, it's a problem of plenty out there. What are we first talking about?
Yeah, good afternoon, and thank you for having me on your show. And this is the reason why we are very positive on the auto industry. I think last 4 or 5 years, every auto company has realized that new model introductions is the way to grow the sales and expand the market. And that is what they are doing. They are trying to move the consumer up the premium ladder. And all the launches that we have seen today are at the premium end. So what that does is that although volumes remain in that high or low mid single digit, the average realization per vehicle tends to move up at least 10-12%. That's what we have seen for last several quarters or so. And that's how they're able to maintain the profitability going and improve the return on assets, because the higher priced products certainly have a higher profit margin as well once they reach a certain scale. I think this trend is going to continue for a few more quarters, and we remain very positive on the entire auto space, including Eicher Motors, which is right now under pressure last couple of days or so. But I think it's a temporary phenomena, and of course, Maruti has been going from strength to strength.
What do you do right now as an investor? Do you buy into this fall in Eicher?
See, I think that it's a great opportunity. Usual disclosure, we and our clients are invested. And I think that around these levels also, Eicher Motors is a decent proposition. It's not going to be like a multi-bagger it has been in the past, but I expect it to outperform the index, at least in the near future, in the medium term as well. And there's a lot of fear around the two launches which have been taking place from Hero MotoCorp and Bajaj Auto. But end of the day, I think that although the market share may reduce for Eicher Motors, the absolute numbers will continue to increase. And if you see of all the auto companies, they have had the best production and sales figure for the month of June. They also have a huge export opportunity, and the kind of brand, distribution, accessory sales, even the slate of new models they have, it's not going to be easy tiding for Bajaj or Hero MotoCorp to get significant market share. And also the numbers which they are talking about are very small, and also they are focused on the above 350cc bikes. And the majority of the sales, I'm not sure, I think 60-70% of the sales for Eicher Motor comes from the sub 350, means that around 200cc to 350cc levels or so. And still over there, the competition is quite limited.
Okay, so that's the take coming in as far as the auto sector is concerned.
Dipan, the big concern for HDFC, the combined entity, is that, the loan growth for the quarterly update, as they indicated, has come in at a 26-quarter low. For the behemoth that it's going to be in its combined avatar, do you think today's crack, or if it continues tomorrow, is a good opportunity to buy or add to positions on HDFC Bank?
I think largely everybody's already invested in HDFC Bank. And it's amongst the top holdings in most portfolios for retail investors that I know of, as well as a lot of the institutional investors. But if you still don't have HDFC in your core holding, this is a great time to buy into it. I remain firmly convinced on the long-term story of the merged entity. And the fact that the management is saying that they will create an HDFC bank every 4 years, which means they're targeting 18% type of growth rates, which should translate into 18% type of earnings per share increase as well. And I think HDFC Bank is trading at reasonable valuation. So that's the kind of return you can expect, that the stock will return at least maybe 18% in line with what the growth of the bank is. So from that point of view, very positive. And these are minor fluctuations which do take place within the stock price. I know that the kind of growth rates are a bit disappointing, but maybe these things can change very quickly in a quarter or two. So very positive on the merged entity, and look forward to a nice strong bank being listed, or rather once the combined entity gets traded, which should provide a lot of capital to the country in terms of retail as well as wholesale loans.
This excitement around the much anticipated and delayed, if you will, Jio Bharat phone launch fizzled out quite quickly. I mean, barring yesterday when you did have Reliance hold out, you haven't seen any meaningful follow through, and the stock is continuing to struggle, sub that 2,600 price level.
Yeah, I think it was never going to be a big profit contributor, this particular launch. That was my assessment. But nonetheless, I think it does help continue the momentum as far as new subscriber growth is concerned. But the key question in Reliance just now, which every investor is asking, is what about the demerger, or if at all IPO of the various divisions? I think right now when we are buying Reliance, we're getting into oil to chemicals, we're getting into retail, and we're getting some telecom as well. It's all three businesses rolled into one. But everybody may not want to be invested in each of these three businesses. For example, I may find retail to be the most exciting portion, but there's no way I can buy it on a standalone basis. So that's the big question mark in Reliance, is that are they going to demerge the company, which is going to be extremely, extremely value accretive to minority shareholders? Or are they going to do just IPOs, in which case Reliance Industry becomes a holding company, and then the holding company discount starts to creep in? So I think this is a big uncertainty around the stock, and it's about time the management had a answer for it. Going by what they did with Geo Finance, we are hopeful that they will demerge the entities and offer free shares of the other two companies, that's the retail as well as the Geo platforms, to its minority shareholders, and that be very, very positive. And that could lead to a quick turnaround in this mild underperformance which we have been seeing in Reliance Industries.